President of the United Nations Economic and Social Council, His Excellency Mr. Munir Akram. You have 5 minutes to deliver your message. Thank you very much.
Thank you, Mr. Moderator, and I'd like to thank the Deputy Secretary General for her remarks, as well as the representative of the African Union, Fatima Mohammed, as well as Madam Christina Duarte, and as well as the missions of South Africa and Nigeria for organizing this event. And thank you very much for inviting me. The link between illicit financial flows, development, peace and security is well established. In Addis Ababa, we committed ourselves to eliminating illicit financial flows. In the 2030 agenda, illicit financial flows were included among the targets of SDG 16. And the Secretary General, in his roadmap for financing for development, has included regional cooperation to reduce and recover illicit flows as one of the 3 priority targets. We are all aware that each year billions of dollars flow out of the developing countries in illicit financial flows. The DSG has mentioned $50 billion from Africa. I would say that an equal, large, if not larger amounts are flowing out of developing countries in Asia and Latin America as well. We commend Nigeria and Norway for taking the initiative last year to set up the FACTI panel. The interim report of the FACTI panel, which was launched in September this year, has identified monumental resources that are lost to developing countries every year. The bleeding of the economic resources of developing countries, especially in the midst of this COVID crisis, must stop. These flows have contributed to slowing the Millennium Development Goal and are now constitute a major obstacle to the achievement of the SDGs as well. We look forward to a final report of the FACTI panel. I believe that the actions that will be required are very clear. Firstly, the stolen assets of developing countries, including the proceeds of corruption, bribery, and other crimes, must be returned forthwith without conditions or other legal or technical obstacles. Secondly, safe haven countries must impose criminal and financial penalties on their financial institutions which receive and utilize such money or assets which are not proven to be legally earned, assets and money which have been transferred for the purposes of tax evasion or avoidance. Third, the enablers of corruption and bribery, such as accountants, lawyers, and other intermediaries, must be closely regulated, monitored, and held accountable. Fourth, the beneficial ownership of foreign companies must be revealed immediately. 5, it is essential to prevent multinational corporations from resorting to profit shifting to low tax jurisdictions to avoid taxation. A global minimum corporate tax could prevent this practice. 6, revenues from digital transactions should be taxed where the revenues are generated, not elsewhere. Distinguished guests and participants, we must reverse the unequal investment treaties that have been concluded by so many developing countries and set up a fair system for the adjudication of investment disputes. Finally, all official and non-official bodies set up to control and monitor illicit financial flows must include the concerned countries. And the United Nations should set up a mechanism to coordinate and supervise the work of the various official and non-official bodies which are dealing with illicit financial flows to ensure coherence, consistency, and equity in their work. The African countries and the African Union have taken bold leadership on this issue, starting with the AU-ECA high-level panel on illicit financial flows from Africa. I believe that international consensus must now be built to halt this practice and to reverse the flow of resources from the developing countries. We will try to endeavor in ECOSOC at the forthcoming FFD forum in April, as well as at the HLPF forum in July, to include this issue as one of the principal requirements for action to promote the SDGs in the decade of action. Thank you very much.
Thank you very much, Your Excellency.